Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know tonight that you do trade at your own sole discretion. Alrighty then, so let's get over to some charts and start a little dialogue here tonight. I'm just going to show some charts. Hold on a second. Get over here to screen one. Here we go. So before we get into it, I see your question there, Tom. Have you been able to lose fear of trading using your single sim method? Hey, Carl G, welcome. I see more people coming in here. No problem. We're just getting started. Yeah, you know, we'll circle back on Nazi in a little bit here, Tom. And if I forget, please remind me. But I want to start off with this, and I'm going to go through. I'm going to cycle through a couple of different charts, and I'm going to see if I can sort of strike at the heart of what might be some of the problem. I think if you can summarize it down to probably, you know, just a couple of issues to address when it comes to the whole fear, confidence, and losses issue is you know, are we in a trend? What, you know, where do I get in? I think getting in, would it be fair to say that the actual trade entry causes the most trepidation and fear? Actually pulling the trigger. And not so much knowing where to get in. I know we all love mid-band trades, because when we say where you want to, you know, we project out into the future and we say, well, where do you want to take it? Everybody says the mid-band, but we don't always get mid-band trades, so that causes an issue. So here's some examples. This is 6E today, and we're going to look at many of these, but I just want to start off with this one, where you can see that you started to get, you know, arguably you're coming off a little bit of a downtrend here, so that the market was selling off, comes up through the mid-band, and let me just ask this question and see if this is an issue for some of you. It's when it's all sort of in how you look at it, right? And let me explain what I mean by that. Here, for instance, to the left, we can see that 6E was selling off. Now, I think that the issue that some of us get into, and I'm not trying to put words in anybody's mouth here, but is when it goes beyond the mid-band, right? And you come out to, let's say you're coming off of a downtrend. Obviously, this is called a phantom trade, the outermost band trade. And so we are looking for a reversal. So technically speaking, this is a short trade, right? But depending on how far the market goes and what time of day it is, this in fact could be a trend change. So on one hand, you're saying to yourself, as you're looking at this price pattern here, I want to short this. Ideally, I want to cover at or near the mid-band in our current interpretation of the move. On the other hand, you're looking at this thing and it starts to pull back to the mid-band and it's looking like it's going to bounce, and you're starting to think, hey, maybe I want to take this thing long on a bounce. Is it fair to say that this is a confusing issue right here? Right here. This topic right here. Sure it is. I think it is for everybody. I mean, so if you were to put something at the forefront of being an issue, particularly when it comes to getting in and where to get into a trade, this is certainly right up there near the top, because your ability to quickly sort of flip sides, if you will, and quickly make a decision on a trend change as it's happening in real time on the fly. See, that's the issue. It's easy for us to sit here now and say, well, you know, based on what it was doing here, look at this huge move up. You should have flipped and taken the long trade, right? But we have to put that here. Hold on, I'm not going to do that one. No, let me get that off there. Hold on one second. There we go. But you have to go back and play it back in real time. And my data's all messed up for some reason in the pre-market session. What I'm trying to say is this, is that in real time as it's happening, you know, it's selling off, it's coming up, it's hitting the, I know it's hard to see that. This is all messed up. Sorry. Here, that's better. You know, some of you are going to be wanting to short that, so you're taking a short off the Phantom, and it's coming, and you want it to come back down. And actually, that turned out to be a decent short. It didn't get, depending on your fill, you might have got a few ticks out of it. But how do you know whether you should be flipping from short to long? How do you know? That's the question. How do you know when you should be flipping from short to long? Now, I used to do this in my old webinars, okay? So I'm going to bring this back. This is going to be a little bit of old school from my old webinars. I would submit to everybody here tonight and listening on the recording that there's no question that when you're coming out of a downtrend or coming out of an uptrend and you get above the mid-band, this is the heads up zone, right? Technically speaking, in the way we teach it, until it breaks a swing, you are technically still in a downtrend. However, you're in the change zone, if you will, when it comes down and it puts in a higher swing here. I mean, you arguably that's the second higher swing because there was one right here. So technically, you know, looking at it now, you had a swing here, tried to get down to the bottom, couldn't do it, came up, a lot of short covering, right? Short covering, comes down, tries to get to the mid-band and break it, can't do it, and now it's heading up. So how do you deal with this? In the old days, and I'm going to bring it back because this might help some of you, okay? It might fly in the face a little bit of what we teach now and how we trade it in the room. But an old way of looking at it was, if you, generally speaking, in a market, if you are above the mid-band, you are said to be in an uptrend and you are looking to buy pullbacks. Now, I realize that that flies in the face of this Phantom short. Conversely, we used to teach, and this, so you got to go ways back in the recordings to hear this, but a simple way to look at it was if you are anywhere near the mid-band, but generally remaining below it, you are said to be in a downtrend and you're shorting retracements. Now, does that help anybody? Some of you it might, right? If you apply that rule of thumb to it, that sort of takes this whole ambiguity zone problem off the table, really, because it's that simple. If I'm at or near around the mid-band and I'm bouncing off of it, I'm taking long trades, right? And if I'm coming up and bumping my head anywhere around the mid-band there and I'm rolling over, I'm shorting it. It's that simple. There's no confusion, ambiguity about that. That's the way it is. That's the rule. Yeah, Eddie, that's real clear. There's no sort of mincing words about it. That's, you know, above it you're long and below it you're short. Now, that being said, I don't want to take anything away from these phantom trades up in here. Okay, I'm not. Don't misinterpret what I'm saying. I don't want anybody to go and say, well, Charles said we don't have to take phantom trades. Trend. There are many times where it comes up into a phantom, it rolls over, comes back here, and then tanks. Boom, down to fresh lows. Those are legitimate trades, no question about it. I take them, Gary takes them, everybody takes them. What I'm trying to do, though, by saying this mid-band thing is for some of you who can't really, who get flustered and sometimes get kind of hosed on these phantom trades when it's a clear trend reversal, then if you're in that camp, you might want to start looking at this very simple rule right here, above, below, long, short. Yeah, you could try it, Tom. Well, you have to realize Brian's saying that if you throw in, if you apply the simple rule and then you throw the phantoms in, it throws off the thinking. Well, I mean, you know, we can't. I mean, in all fairness, we can't we can't control what a market's going to do, and we're all going to have our interpretation of what trade to take based on what the market's doing. Now, this does not necessarily apply to. Yeah, there's always exceptions. You know, you can't just trading. You know, it's like a box of chocolates, right? You get what you're going to get. It changes every day, and it's just a fluid thing. You got to adapt. It would be nice if there was some rigid rule that you could just apply to everything, and you say this is what it is, and you can do that. If you want to look at mid-band above long, mid-band below short, notwithstanding phantoms and what else is going on in the market, well then by all means do so. Now the exception to that would be Carl G bringing up here, very good point. Let me see if I can go find this, is the chop or a range where the mid-band is in the middle of it. But before I go find that and get sidetracked with that topic, let me come back and circle back to another issue I wanted to cover before we leave this chart. So by the time we get over here, so this is today on 6E. This is the latter part. I'm here in California. Everybody knows the Pacific time down here, right? Pacific time. So adjust that to your time zone. So for us, for me out here, this is about noon, 12 going into 12:30. Now, here we clearly see that we get a mid-band retracement right around 12:20. That's just a textbook, box it in, take a long trade box. Textbook, mid-band box. You know, if you were here trading it and you put it on, you probably got filled long on this bar right here, and then off she goes. You get the scalper target when it hits here, and if you put 2 on, of course you got your runner, and you're trailing your stop, and you're trailing your stop, and you're trailing your stop. Now, I want to contrast this pullback into the mid-band with this pullback right here. What do you do? How do you deal emotionally or physically with your trading tools to retracements in a trend that don't get back to the mid-band? How do you deal with that? You're nervous taking those, right? You know, would you say that you might be nervous taking that? Because you want it to come to here. You want it to get back to here. This trade, ideally, I'm just supposing for most of us here tonight, you would be saying to yourself, well, Charles, I want to get the long. Yeah, I want to buy a retracement. I understand all that. But I want it to come down to here, but it's not doing it. What do I do now? I'm floating out in no man's land here. You got resistance here. This trade makes me nervous because it hasn't retraced deep enough to make me happy to take it. Is that true of anybody in here tonight? Right here? This sort of halfway down program? What's the dealio with that, huh? All right, Tom, right on the money. Nervous is an understatement. Look, here, I'm gonna help all of you that I'm speaking to right now. Look, if you can't deal with taking a trade halfway down on a retracement in a trend, then you know what? What should you do? What are you going to do if you're nervous and you can't do it and you pull the trigger and you get all sweaty and you take losses and every time it just doesn't work out because you get stopped out and you don't want to do it? Don't do it. I mean, seriously, who said that? Tom K. Simply wait for the next trade. Sit it out. Yeah. It's that simple. Look, if you are just comfortable with mid-band trades, you know, what you might have to do to get more trades to take would be to maybe look at a couple more instruments, because it's quite possible that you could get these runs, huge runs, making you a lot of money, and you're missing them. You're missing them because these little smaller pullbacks, you're just not taking them because you're so nervous. So solution number one, stand down till you get the trade set up you want. That's solution number one. Number two, let me clean this. Let me clean this up. Hold on, I'm getting all messy here. Trying to make my point. Stand by 1 second, please. There's a couple other ways to deal with it in a more direct way to help yourself see and take the more shallow retracement, because I'm sure that this has a lot to do with fear of loss. You know, what's going to happen, I'm going to get filled on this bar, Charles. I know it. Okay, I'm going to get filled on that bar. My stop's way down here at the mid-band. It's going to chop around, going to come all the way down here, nail my stop, right? Full hit. And then I'm going to have to be forced after taking a loss with getting in where I wanted to wait to get in the first place. So there's a couple of ways to deal with that. Okay, how do we deal with that? Instead of using a box here, you could simply use the line or the ray trader. You would have been filled pretty much on the same candle. But what the line lets you do is that as long as this thing is in an A, B, C, D, E, F pattern and continues to sort of work its way down, if you position the line or the ray correctly, so if you put it looser, of course, you wouldn't be filled till that bar, close of that bar right there. One of these two bars you would be long. Here's another thing, okay? You don't have to put your stop 12 ticks down. I know OT will automatically do it for you. Depending on your fill here, it would put your stop, you know, I don't know, 12 ticks. I'm just arbitrarily picking a place. Somewhere probably down in this area down here, which is where you want to get in if you were to be patient and wait. Now, if hypothetically we're saying that it did chop around and it gave you a couple of bars and it starts to retrace, let me ask the question, do you have to leave your stop all the way down here? Just let it come and get it? In other words, take a passive stance on it? Just let it sit down there, right? I know it's chopping around. It looks like it might reverse. It's coming down a little bit behind where I got in. Do you have to just leave it sit down here and take a full hit? No. No. Drag it right up here. Because if it takes that out and it's going to go lower, you can deal with that later. You lessen your risk. So in looking at this trade now, the shallow retracement issue that we're trying to address here, what is your risk and what's your potential return? Well, your risk is now this. Sure, OT might put it down there by the mid-band, 12 ticks, depending on your setting, 10 or 14, whatever your setting is, it will set it, right? But then you can immediately drag it up a tick under that swing, right? So that establishes your risk is just 2 bars. And there's a strong potential and a nice, powerful uptrend that you're going to at least get back up to here, which is what it did. Yeah, don't take the full hit. Yeah, if it starts dinking around and comes back and you just want to choke it off, by all means do that. I mean, you can hit if it comes slightly below your entry and you're nervous, you can always get out. That's how you avoid. If you're trying to alleviate the fear of taking these a little more challenging trades, then you have to take an alternative approach. You can't take a passive approach and just say, oh, well, I'm going to draw a box. You know, OT is going to put my targets, put the stop down here. I'm just going to see what happens. Well, yeah, you're kind of throwing caution in yourself to the wind, and whatever's going to happen. If you want to be a little more aggressive in your management of it, then, you know, you're going to intelligently sort of move things around based on the conditions. Everybody see that? I would strongly urge you to try to take some of these, because if you don't and you're just sitting for mid-bands all day and night, you know, you're really limiting yourself in, you know, your ability to catch long, good moves, which are going to put good coin in your pocket. Any questions on that? Hopefully that helped. All right, I ran out of data. Now, there was a question about NASDAQ, so let's circle back on NASI and look at it this morning, and we'll look at it now. Let me get the NASDAQ chart up. Stand by. Yeah, Mario, absolutely. I didn't see you come in there. That's how you deal with that. You got to really learn the instrument that you're trading, what types, how far it pulls back, does it respect the swings. You know, I've seen this price pattern before. I'm comfortable. I know it's, you know, it usually holds the support level. I'm comfortable putting my stop there. That's all part of learning your instrument, right? I don't like the idea of not being passive, says D. Hey, D. I didn't see you come in there. Excuse me. Yeah, you got to be proactive. I know that there is a certain sense of complacency and and a little bit of laziness kind of comes in there when OT pops the trade, and you just want to sort of let it go, hit the targets or hit the stops, just whatever it's going to do. I'm just going to let it do it. But I'm telling you, you're much better off being much more proactive in your trade management. Now let's take a look at a NASI chart now, and then we'll go back to this morning, okay? So here we are right now. Let's look at where we're at right now, and then we'll circle back to earlier in the morning, okay? Here we have some examples of the very issue we talked about on 6E. Here's a good example right here. You had a sell-off on NASDAQ going into just before the close. The close is at 1 o'clock here Pacific time, right? So that's right over here, right over here. We had the sell-off into noon-ish, comes back up right through the mid-band all the way out to the outermost band, which in this case would be called the Phantom. Is there a short trade at the Phantom on NASDAQ around 1220? Is there a legitimate short trade here? Yes. Right? In fact, you can make the case that that was also the top of a current trading range right here, like that. See it? So yeah, it's a legitimate short, and yes, it did get down to the midband. So that's a legit trade, no question about it. But after this occurs, what happens right in here? Gets a higher low right at the midband, doesn't it? So it's exactly the scenario we looked at on 6E. Only this one got right to the midband, whereas the other one was slightly above it, remember? The 6E example? And then we pop up and we take the swing and we go back up to this higher part of the current overall sort of larger trading range that we were in most of the afternoon on NASI. And in fact, what did we just get a few minutes ago when we opened up the room? Right in here. Long outside the box on a mid-band bounce. Right. Now, when let me ask this question. Make sure everybody's still awake here. When you get a pullback to the mid-band, how do you know whether you should use a bar close or a box with a close outside the box? Which one do you use? And how would you have taken this one? Do you box this in? Do you box that in? Would you have done it over here and boxed this in? So you'd be in it? That's kind of a fearful trade. Let's do that scenario real quick. Okay, here's your mid-band box. Maybe you had it like this, something like that. And it gets closed up and you're long on this bar right here. But now comes back and it challenges the support level and actually breaks it a little bit and then comes back up. So you're on an emotional roller coaster right here, huh? You're closed on that bar, so you're long from here, 15 and a quarter. Came all the way down to 1250, which looks to be about maybe 10 ticks. Almost gets your stop. We're doing a hypothetical here. So just work with me here, okay? So what are you feeling when this thing pulls back and comes within a couple ticks of your stop? What are you thinking? You're filled here, comes back, stops just under the mid-band in this hypothetical trade. So you're upside down maybe 10 ticks. You're feeling some heat. We call that feeling the heat, right? How do you like dealing with feeling the heat? What does that make you feel like? And then you start to get a little more euphoria and the heat subsides because then it comes back up. It goes through your entry and you're up a few ticks. We couldn't quite get back up to here, so it's not hitting your scalp target just yet. It stinks. Hardy has a good one here. We have to learn to take the heat if you're going to be in the market trading. Yes, nobody likes it. Nobody likes feeling heat. It happens a lot, though, doesn't it? I mean, there are cases you get in, it bounces. You know, if you're getting long, it bounces, runs up in your favor. You feel almost no heat at all. Goes up, nails the target, and you got a runner. That's nirvana. But that doesn't happen all the time. More times than not, it's like this. Now, first of all, I want to put a caveat on this. I want to say this. I want to say, look, it's the time of day. We're in the after-hour session. There's probably no volume on this thing. There's probably huge slippage. So in reality, you probably wouldn't be trading this anyway. But what I'm trying to say is that there are cases where, you know, you're in an active session and you get this. Couple of tips. And here's the trade-off. If this thing is starting to do this price pattern right here, see where it's not, and let me be specific about this, so everybody's real clear about what I'm saying here, okay? So there's no question later, what is he talking about? So when you see a candle that looks like that, and it's not getting up to here, what is this telling you? It's Greystone Doji. It closed almost at the bottom of the candle. The wick of the candle couldn't even get up into here. And it's right near your entry. It's like right at your fill. What is this telling you? And now you get another bar closed down, so you're upside down a couple of ticks again, and it's coming back down into here. Let me put it a different way. Are you getting any follow through to the upside? You're long and you want it to go up and go up here. Are you getting any of that follow through, yes or no? No. Do you want to sit there and have it come all the way down here and get your full stop at down here? You want to feel it come all the way back down here and maybe check it again? What can you do to remedy this situation? Anybody? If you're in this situation right here, so I know what psychologically is going on in your head. I know it. Okay, look, I've traded for a long time. I know exactly what's going on in your head. Here's the trade-off right here. Here is the trade-off you are dealing with. You're saying to yourself this, psychologically, this is the trader speak you get in your head. When this bar goes above your entry and you're slightly positive again, you get that slight endorphin injection, and you start to say, it didn't get my stop. It's going to go back up. It's going to hit my targets. Yay! Right? And then that's quickly smashed and squelched because, look, this bar closes down and you start to get that angst and fear again because you're saying to yourself, dang it, it didn't go up. It might come down here and hit the swing and take my stop out. Now that fear is back. You can simply get out. Yeah. You don't have to second guess yourself. Okay, a lot of traders say this. They say, well, the trade-off, Charles, is that it bounces. Look, and I understand this thinking because it goes through all traders' heads. Well, Charles, all due respect, it could get a higher swing right here and then bounce and run 100 ticks. And I'll miss it. If I hit the close button right now, I could miss this next big leg up. Why would I do that? Well, then my response to you would be, well, is it doing this now? What evidence do you have on this chart that it's going to do that right now? Tell me. What is here telling you that that's going to happen? Now watch it bounce and run 60 ticks and make me look like an idiot. Yeah, look, if you're not comfortable with the trade, you don't have to feel fear of being stuck in it forever. I'm married to this thing and I cannot get out of it. And you're sweating on every tick of every bar going up and down and up and down. I don't know what's going to happen here. The fact of the matter is, at this point in time, this is not happening. It's just not. And you have a 50-50 shot that it's going to come down and get your stop or check the swing or go up and make you a little bit of money. So you can close this, relax, take a little pop for a couple of ticks, and then look for something else. Yeah, everybody follow that? You can always get back in. That's right, Carl. You can eke out a small gain or a small loss. You don't have to feel saddled to a trade when it's chopping around like this. If you're not comfortable, you don't want a full stop out, just simply hit the close button. All this will go away, and you look for a better entry. Ask for an annulment. Yeah, there you go. All right. Does that make sense? I know so many traders. I can't tell you. I talk with traders all the time, and they feel like they're married into a trade, and they can't get out of it, and they're stuck. They're just watching it in pain. You know, you're just in pain, trying to wonder what to do. Hit the close button. Flush the toilet. And look for a better trade entry. You know, another one will come along. Don't feel like you're missing anything. You really aren't. It's one thing I could say tonight to help alleviate any kind of angst and problems you feel with that. Don't hesitate when you think it's right to close it and flush the toilet. Hit the button. Get out. Relax. Take a deep breath. And go back and look for another trade. All right, so here's NASDAQ from this morning. Clearly we were buying and getting long this morning on NASDAQ. Long trade, lots of long trades. See this bounce, nice long trade, right? I have prenups on all my trade setups. This is we were trading the long side of NASDAQ this morning, right? Everybody remember? Yeah, we were buying support, right? Getting back to the mid-band. Pass me over whatever you are smoking tonight. No, wrong. All right, I'm messing with you. We were shorting it. We made a ton of money shorting NASDAQ today. Come on, everybody. Those to check to see if you're paying attention. It's a downtrend. We're selling resistance. We sold it all morning, right? Remember? Shorty, short. Every one of these was a short rollover. Every one of them. Some of them were textbook mid-bands. If you're a mid-band trader, you got one right there in the pre-market session, so it was already short coming into the open. 630's here. Here's your open right here. Equity market open. We took this one. I distinctly remember calling it with Gary in the room. We took that one. Got some nice scalp coin out of that one. I think I stopped out and got back in here. I'm trying to remember. It's been a long time since then. My brain's getting old. I know we got back in here. Took some coin. Got back in here. I might have added some. I don't know. This thing was just handing you money today. I mean, Jiminy Christmas. It doesn't get any better than this. This is like textbook downtrend sell-off. Every retracement to resistance, just sell it. Boom, 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 boom. Here we are at 7 o'clock. We get another one here. We get two more here. It starts to look like it's going to bottom out. I think I wound up holding a short on NASI all the way till we closed the room, didn't I? As I recall. This last one here, this is the end of the room coming up right here. I was in it, nursing it down, and I had a tight stop. Oh, I remember now. That's right. I had a tight stop, remember? Okay, it's coming back to me. I got out somewhere in here on whatever was left from up here because I loaded the boat on a couple of these. Anyway, it came up here to the mid-band, and I distinctly remember saying, you can re-short this up here, but I'm not going to take it. Anybody remember that? Checking audio, checking cursor. Did anybody see all that? Here, cursor moving. Cursor moving. Everybody see it now? Oh, I must have been paused or stalled out. Let me go back and recap. My apologies. I don't know what happened there. Yeah. Okay, chart moving. See the chart moving? Let me go back real quick. 2 seconds. No problem. Pre-market short, roll over at the mid-band. I didn't take that. I wasn't in it. So technically speaking, the market was already short going into the open. That's what I was trying to say, right? Within the first 2-3 minutes of the open, we get this nice rollover short just shy of the mid-band. We took that. We called it. We took it. Remember? Came back up close to the mid-band. These are instances that we discussed before. Your risk is low on these. Okay? I mean, you know, if you drew a line or you box it, your bias is to the downside. So you don't have to have fear in taking these more shallow retracements that don't get to the mid-band, simply because if it doesn't close down, you're never filled short, right? So let's say hypothetically you box this in here, and it's not quite the mid-band. You have short only enabled, right? And it comes up a couple more bars up into here. Well, what do? You're not filled. It never broke down. Yeah, you come up and you rebox it up here. No problem. Lee says, I can see the entries, but I'm having issues with the trailing stops. Okay, we'll talk about that. Let me get done. Let me get through with this Nazi deal, and then let me circle back on that. Okay. So this is what I was trying to show when I was paused there. Here's another short here. Here's a textbook mid-band short. We took that. We took this. We took this. I took that one. Took that one. The one I missed was right at the end. Remember, it was hitting the mid-band. I said you could short that with a tight stop just above the mid-band. Remember? I don't know if anybody was in the room and remembers that, but that turned out to be a huge leg down. It put in the fresh lows, and I missed it. See it? So when I said that in the room, what I was saying I was saying that you could short a bar reversal or a box here. And so let's say you did the box. Okay, let's say you did the box. And you were filled short on I don't know, this bar right here. Let's say you're filled. How much risk do you have in that trade? Let's say the OT puts your initial stop 12 ticks above here, so maybe it's sitting way up here, your initial stop. Well, when it started to bip down into here and give you a little bit of coin, maybe you're getting down towards your scalper, what do? Yeah, you can get your stop way down in there. Like that. You have almost no risk at all on it. Okay, let me circle back and address Lee's issues in regards to trailing stops and speak to this whole issue of tight versus loose stops. Now, in a tight stop scenario, you would be a trader who would be getting in and out on a run like this, on a big run down. Let me compress this so you can see the whole thing a little better. Yeah, like that. Okay. All right. Now, when you have a very strong, pronounced downtrend like this, you really have two choices. Well, there's lots of choices, but let me just outline two real simple ones. You can short a rollover on a retracement. You can keep a tight stop just around line 6, like in here, where you're following, or around stealth. Usually it's between lines 6 and stealth in a downtrend down here, right? And so when it comes up and it comes through it, you get out. Now, the issue for you, if I'm describing you, is that in order to get, you got to get back in. Now, where you get, I'm going to show this, and this is a hypothetical short from up here. Let's say you get stopped out on this bar right here. We're just picking spots. Let's say whatever, right somewhere right in there. Now, by the time you get filled short on a rollover or a box up here, where are you getting back in? Right in here. Can you see that on the close of this bar down? You're within a couple of ticks of where you got stopped out. Now you got to pay commission on another trade. Now this isn't always the case. It happened again here. You got the rollover, right? Comes down, stops out, maybe in here somewhere, right? I don't know. Close of this bar maybe, above line 6. You box it in, you get filled short again, you get in on the close of either this bar, which would be good, or even perhaps this bar down here, which would have been almost exactly where your stop got stopped out. So in a long protracted down move or up move like this, where it's methodically selling off and it's coming back in, you have a couple of choices. You can go with the tighter stops. You're going to have a lot more trades because you're going to be getting back in fairly close to where you got out. Now, when I say loose stops, what I'm referring to is using up around the mid band as the stop. Okay? In which case, every time it came, this would have been, you would have taken this initial short up here, on that rollover, and this became one continuous trade. You put on some contracts up here, whatever, you put your multiples on up here, and then, you know, you see how the mid band acts as resistance the whole way down. Now, it doesn't happen very often like this. This doesn't come along very often where you get a nice methodical sell-off. But that's the loose stop. That's the loose stop approach. You're letting the market wiggle around. Now, the argument against that is that the distance from here to here on these retracements can be as much as 20 ticks. Now, if you're looking to get a 120 tick move, you're going to have to give chunks of it back. The other alternative is this. You put on an initial sort of probe trade with maybe 1 or 2 or 3 or 4, you put some minimal amount up here, and then as it comes down and it takes each leg down, and I know this Gary trades this way. Okay, so here you get a leg down, so you're banking, let's say hypothetically you put 5 on initially. You peel 1 or 2 down here. You let it come up. When it rolls, you put, say, two more on right here. Now you have a blended average somewhere in here, right? You come down, right, almost gets you here, comes back up, rolls over, and you come down and you peel a couple more down here, right? Comes up, you put a couple more on here. Now your blended average is somewhere in here. Are you following that? That's a technique. I occasionally do that. I'm more of a sort of all on, all off person. I will peel on the way down, but generally I will not add back on the retracement. But that's a very effective way to do it. You can see here that each time, so you're kind of, think of the addition approach is a little bit like a blending of the short stop out approach with the letting it run approach. Can everybody see that? Because each leg down, you're approaching it as a scalp trade. So it comes down, you peel some, you go back in on a roll, right? You peel some more, you go back in on a roll. And each time you do it, now, by the time you get down here, you still have maybe a contract or 2 left from the initial entry, but the blended average is way down here. So that's way in the money. It's going to be easy to add with the new PM, with the new OT. Yeah. Banking the coin on the way down. That's what you're doing. So there's different techniques to approach along a big trend move like this. There's the technique of getting in and out. There's the technique of putting contracts on here, peeling some and leave some runners, or even one runner as it continues to move down with a very loose stop. And then there's the other approach where you're adding. You're taking away, you're adding in. Taking away, adding in. Taking profits, adding back in, all the way down. Now, I think this probably got some people, and this is a case where a phantom trade did not materialize. What I'm saying is this, is sometimes, and I know all of you have seen this, is the market will come back to the mid-band, pause just slightly there, trying to decide which way to go. And at this point, you were probably thinking short, so you might have only engaged the short side of the box, right here, right? Trend, at this point, technically, the trend was still down, right? But it plows up. Now, did you get a phantom trade on this move up here? This move up here, did it ever really give you a phantom trade? No. No, it plowed right through it. So that's a case where there's no question we're going into a trend change situation, and there's no phantom rollover up here to take. It just went right through it. There's no place to draw a box or a line or anything. It never rolled over. What do we look at next? Let's see, Mary's asking here, my strategy is grayed out. Do you know how to fix it? You have to be connected to a data source to enable a strategy. And then you have to select an account to associate it with, a SIM account or a live account, or you have to associate it with some account, and then you have to enable the strategy. But it will not come on if you're not connected to a data source. It won't allow you to turn it even on. In replay, yeah, you know, it should come on for you. All right, what do we want to look at next? We got about 10 minutes left here. What other instruments? Just go ahead and type in an instrument. We'll see if we can do a little scurry around the market here and look at some. What do you want to look at? Weimer? Let's get a Weimer up here. Just type in an instrument. Try to get as many as we can up here. Now, a word of caution. Everybody knows I'm a Weimer lover. I love that YM. I like Nazi too. They're my little friendies. But there's been an occasion here lately where Weimer has been pretty gnarly and choppy. Now today, let's get a Weimer up here. Okay, we'll look at gold. Quite a few people asking for gold. We got a couple of Weimers and an EMD. All right, we'll get through all these. Open the market was right here on old Wymie. Right there. So much like the NASDAQ chart, you can see that we had rolled off of the mid-band and we're already in a short condition coming into the market open. Like this. Now, this was a little frustrating for about the first half an hour because while, and I think this adds a little bit to the confusion, and I understand why, is that everybody, you know, we all want the equity markets to all trade in sync with each other. So, you know, Russell's going down, we want all of them to go down, right? Nazi's, you know, Nazi's rallying up, we want them all to rally. It makes it easy. So, you know, we had the case where NASDAQ was selling off. Russell, as I recall, was actually heading up for the first part of the morning, remember? As I recall, I have to look at the chart again, but I think it was divergent. And then old Wymie here, she just could not break down. The first half an hour, she would come up here and she'd hit this area here around the mid-band. She just hit it and hit it and hit it. And it just couldn't take this swing out. Remember? 25. I kept saying 25. It just can't break it. Boom, 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 down and again and again and again. It just can't. And then the shorties came in and the sell programs flushed the toilet. Down she went. So you got to be cautious in instances like this. And as I recall, right around this time, around 7, is when Russell stopped out of its long trade and then just flipped and tanked. Excuse me. So you have to be patient because in cases like this, you know, you want it to break. I kept, you know, I kept getting in and out here. I got in it and then I got out of it. Got in it and then I got out of it, and I was really frustrated. And then it just plowed right through it. But, you know, that's what some markets are going to do, right? Okay, they're testing it, they're testing it, they're testing it, they're testing it, and then bam, it's either going to break or it's going to flip and go completely the other way. You know, and then you got your sell-off, and we got a couple nice retracements for those of you who weren't in it. We called these out. We were calling out stops. I rode this all the way down. There's another spot right there to get in short or add. Another spot there to get in short or add. So you can see here, this is also doing a similar situation as the other one, where, you know, depending on the tightness and looseness of your stops, it could have stopped you here, but you'd have to flip and get right back in, unless you're waiting for a deeper retracement. If you did that, then you're scalping, right? You're scalping all the way down. That's the three approaches. Loose stops, catch the whole run. Scalp in and out, taking coin as it drops. In other words, you're getting in on a rollover, and when it spikes down, you get out of it. So these are all individual trades for you who are scalping. You get in again, and you get out again. Now, if you're going to do the scalping technique, I would suggest not leaving such a loose stop on it. That's why I try to give out several levels in a move like this, is because I'm addressing different trading styles and techniques, right? The scalper trader has a tight stop, and he's getting out on a spike down here. You know, he's getting in, he or she, the trader, and then getting out, waiting for retracement, getting in, getting out. So each one of these legs is an individual trade. That's what I'm trying to say. 1, 2, 3, 4, arguably 5, possibly 6. The trader who goes for a longer run with the looser stops, you know, you're in up here. You know, you're filled short on one of these bars right here, and then you maintain some looser stops on whatever you have left. So you're peeling some on the way. Say you put 4 or 5 on multiples up here, or even 10. You peel one off, lower the stops. Peel it off, peel it off, peel it off, lower the stops. The adder, the trader who likes adding, adds when they come up. You peel, so you're doing the scalper technique. You're taking advantage of that aspect of it, and when it retraces, you add more and blend your average down. Same thing we showed on Nazi, right? Everybody see that? That's the 3 techniques on how to do the trail stops in a a downtrend protracted move like this. Yeah, I like shorting too, Tom. I love shorting because, you know, once the sell programs kick in and they start really pumping the market down, it drops usually pretty quickly if it's going to go. If it's fighting it, yeah, you got to wait, like it was up here between 6:30 and 7 on Weimar. It was fighting it. You know, they wanted to take it down, and that's because the cash market was, at this time, the cash market was still up 60 points. It was pushing 21,000, and the shorties wanted it, and the shorties eventually got their way, and they took the down negative. Yeah, Hardy says sometimes I have a short bias. That's another tough thing. I haven't really talked too much about that in a long time, but some traders, a lot of traders, it took me a long time to get away from this, would have a bias. You got to really try to get rid of that bias. The bias can hurt you sometimes. It really can. You know, you're looking for, you know, the market's selling off and it's dropping 60 ticks and you're looking to get long. You got to try to get away from that. You got to go with the flow, go with the trend. All right, somebody want to see, a couple people want to see gold? Stand by. Yeah, Brian, I don't really do much counter trend trading where I would short a downtrend like that and then buy back and try to get long off a swing. I generally, if a market's moving in a trend direction, I will pretty much trade just with the trend. I won't take any counter trend trades. I very rarely ever do that. In fact, I can go so far as to say I hardly ever do it. Been bit too many times on that. Okay, let's get gold up here. I mean, some traders do it. Some traders can trade both ways. You know, they'll be shorting, say Nazi and Weimar all the way down, shorty, shorty, shorty. And they'll look to buy to cover, and sometimes they'll occasionally get long off a bounce. You got to be really good at doing that because it can bite you pretty badly. Oh yeah, divergence. I'm sorry, you were speaking to divergence. Yeah. That we had that today. Yeah, we had that today. Nasdaq was selling off. Russell in the early stages, the mid caps were heading up. You saw Weimer was stuck in between. But yeah, when they're all selling off, yeah, it makes it a lot easier. If everything's heading down, you have a much higher confidence level. There's going to be some follow through because those sell programs are kicking in across the board, right? All right, so here's gold from today. Just a heads up to you gold traders. Uh, there is an occasion, and this doesn't always happen on gold. You can look at a couple of pre-market session times here. I've seen between like 4:35 a.m. here, so this would be like 8 o'clock, 7:30, 8 o'clock Eastern time. Sometimes you get a move on gold around 5:30, 8:30 Eastern. Just adjust that to your local time. Here, of course, we got a textbook mid-band roll right at the right near the open here. I caught this. I did take this trade. Now here, listen. Some of you say, well, Charles, why you got a good short trade there. Why didn't you call it in the room? Here's why. Look, we've got enough going on in that room, right? We've got 4 charts. We got Gary and I calling all manner of trades in there, right? Targets, stops, entry points, what's the trend, all sorts of decision things going on in there. I don't want to muddy the waters with trying to call out gold trades and forcing people to switch what they're doing and their focus and all of a sudden start trying to pull a gold trade up and start chasing gold around. What I'm saying, just to be explicitly clear about this, is that if you want to trade gold, use the tools and techniques that we use on everything else, but you're going to trade it yourself. Okay? In other words, you should have been able to see this retracement and taken a short here. You would have boxed it in, used your tools, line, ray, whatever. It's no different than any other instrument. There's your short right there. Yeah. Now it can be whippy. All right, look at this part right here. It's in the pre-market session. You get a little whippiness here. So, and it's $10 a tick. So you can get bits. Not like the $5 instrument. You put if you get a full stop on a NASI or a $5 instrument, it's 50, 60 bucks. On here, it's 120. And gold can shotgun too. All right, so I'm not discouraging anybody from not looking at it. But by all the means, if you want another instrument to look at and you want to look at gold, trade it in sim until you get the feel for it, because it can be whippy, it can shotgun sometimes, and it's $10 a tick, so it's double the risk of the other instruments. And whatever you do, if you're making money on other instruments, you don't have to go look at gold. Here you can see we went into a range. Came out, did sort of a phantom trade, came back down, chopped around in here for a bit, then continued on down. Later in the morning, just typical gold. Come down, started to resume a little bit of a downtrend, then she sold off into right now. A couple of more mid-band trades here, mid-band, little rollover shorts. So yeah, if you're watching it now and you want to play around and you're just looking for something to do this evening to stay busy, keep an eye on gold, and it looks like it might get back up into here for you to do a little test rollover short, right? Lee says, I found gold very tough to trade successfully. And then it can do nothing for long periods of time. You're right, Eddie. Yeah. Yeah, so it's a hit and a miss with gold, okay? It just is. If you feel like you want to check it out, by all means, pull the chart up, peel off a couple of trades, use our techniques, use the tools, and if you've got some consistency on it, then put it in your trading repertoire of instruments and trade it by all means. But if you get in there and you're getting whack-a-mole around, and by the way, before we close, what were we supposed to do last Thursday, and did any of you do it? You know what I'm talking about. You know what we were supposed to do. Did we do it? And did it help? Some of you might be here saying, what the heck is he talking about? What the heck is he talking about? If you were there last Thursday, you know exactly what I'm talking about. And did you do it? And more importantly, did it help you? Wasn't lines on charts. Let's see how many of you did it. Show of hands are the ones that did it. Just type in a yes or a Y if you did it. Keep it real simple. If you didn't do it, don't type anything in. I'll explain what it is in a minute. If you were here last Thursday and you did what I suggested, you know exactly what I'm talking about. Okay, we get some yeses here. We got Brent, Lee, Tom K, David D, Tom H did it. Chris is saying I should have done it. Ted said it helped me focus on Nazi only, and it helped. Good. Lee did it. Okay. Mary, Mark. Okay, so quite a few of you did it. All right. What that was we suggested strongly to set up separate sim trading accounts to trade different markets. And we suggested to set up manual, NQ, manual, or whatever your instrument, manual YM, Russell, manual, CL. And I showed how to do it in that webinar. Separate trading sim accounts for each instrument. And then each day, each morning, you picked one of your instruments and you focused only on that. And then when you traded it, you sent those trades for NASDAQ only into the manual sim account so they could be tracked separately. Does everybody remember now we said that? We spent a lot of time in the first part of that session explaining how to do that. Now, those of you who did it have typed in here that it helped huge. So if you haven't done it, Brett says huge. Hardy said, is that recorded? Yes, it is. Yes, it is. I mean, I can show a little bit of, I'll show a little bit of it here before we wrap, okay? So you don't have to go through a whole webinar to figure out how to do that. I'm telling you, if there's one thing you can do from tonight out of anything, everything we discussed. Hold on, I'm getting a little bit of not a cold, I'm reacting to the pollen out here. Can you give me one sec, just about 30 seconds to excuse myself, and I will come back and finish the whole separate account thing. Give me 30 seconds, please. I'll be right back. My apologies, everybody. Sorry about that. Yeah, I mean, it's amazing for me to look at pictures of like Washington, D.C. and back east, and I see all this snow piled up everywhere, big storm. It is like 65, it was 80 degrees out here the other day, and some of these trees are in full bloom. So we're already getting the spring pollen issue, and I am, some mornings I'm just sneezing, just can't stop sneezing. But anyway, so okay, so here's what we did. So yeah, you want to log into the subscriber area if you've not done so, and watch last Thursday's webinar recording, because I go into detail about fear and losses and setting up separate accounts, but I'll quickly show how to do it right now. Stand by. Let me see if there's a quick, easy way for me to do this. Okay, hold. Let me drag the control center down here. Get you all set up. I'm gonna quickly show you how to do this, and then we'll wrap. Okay. All right, here we go. So what we're trying to do here, from a big picture point of view, is we are trying to track our performance on separate instruments, because can everybody see my control center moving around? Control center moving around. Control center moving around. Yes, yes, yes. Am I live here? Okay. All right, good. Okay. All right. So what you're trying to do here is you're trying to many times when you trade multiple instruments and they all get dumped into the Sim 101 account, it's very hard to go back later if somebody came to you and said, well, how did you do on NASDAQ this week? I don't know. I think I did pretty good. Well, how do you know? Well, I traded YM. I think I did okay. I think I took a couple of crude trades. I know some of those worked out. If I'm speaking to you and you're not able to quickly discern how you're doing on each specific instrument, then you really need to do this, okay? You go into Tools, Options, Simulator. Now you see this Accounts button? What this is going to do is this is going to create separate sim accounts for each instrument, right? So here's what you do. You click on it. Let's say, now you can name it anything you want, but you just got to remember, whatever you name it, that all the trades for that instrument are going to go into this account. It's a sim account. It's a separate sim account for that. Let's hypothetically say you want to track NQ. Now you could put in manual NQ. If you're doing OT, if you could type in NQ new. It doesn't matter what you call it. But I already have NQ in here, so I'm not going to do it. So you're going to click, well, I'll try it. No, it already exists. Let me pick another one. Let me pick out one that doesn't exist. Let's say wheat. Now, you're going to get a little flag here. New sim ZW was created, effective next time you log in. So here's the thing. You have to do this before you log in so that you create this account, that when you log in, it exists. So if you know what I'm saying is this, is you don't want to wait to do this. You go log in tomorrow morning and say, I remember I got to set up those separate accounts, because it won't be active. You won't be able to trade it. It won't exist as far as the system concerned until you completely log out and log back in, and then now ZW will be there for you. Okay? That's all that is. Next time you log in, you're good to go. Okay? All right, so now we got ZW in there. Now, when you put Object Trader, or whatever tools you're using to get into, let's say, gold, let's say you created one for gold, you're going to select that account, right? GC, you created one in there called GC. Whenever you trade gold, you're going to send all your trades to the GC account. Now, at the end of the week, what you're going to do to see how you did, is run an account performance deal. And that's right here. Okay, so we went into tools, went into options, went into accounts, hit the button, created a separate account at NASDAQ, YM, crude, gold, whatever it is. You send all your trades for each separate sub account into that account, so each day, every night, each week, you can go and generate a report. And in here, it'll tell you how you did. Wins, losses, long, short, percentage, everything. Run a report for how you did from where you started. Say you want to track it from the beginning of the week through today, and then you select your account, and then you click on this, and it'll show each one how you're doing. And what this will do, let's say that you have 2 or 3 instruments that you're trading, it'll tell you, maybe crude oil, you're doing really well. You're up 380 bucks. Maybe NASDAQ is down 150, which you're surprised because you thought you were trading NASDAQ real good, right? And maybe Weimer's breaking even. I'm just making up numbers. The point is that you'll be able to track all this separately. All this will be tracked separately when you point it to the individual accounts. Okay? Everybody see how to do that? All right, hold on a second here. Stand by. I got a question coming in. I want to see if I can answer it before we wrap. Give me 1 second, please. Chris, I see your question. I'm going to see if I can address it real quick, and then we'll wrap this puppy up, okay? All right, let me show this. Okay, Mario, Hardy, some of you gotta take off. That's cool. Tom K, thanks for coming. Everybody, Hardy, Mario, if you want to stick around, Chris's question was, how do I select the account? Uh, 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 and this is one thing I want to show, and then we'll wrap it up. Okay. Now, this object trader is set to Sim 101. Okay, let me show you. Where is it? Right here. Sim 101. All right, can everybody see this? Object trader set to Sim 101. Now, when you go to activate, no, I'm not going to deactivate it real quick. I just want to show. Over here, notice how it's grayed out. Can you see how it's gray? The panel is gray, indicating that you are in Sim. This is how you know you're in Sim. Right? Okay, so I'm going to disable it. Everybody see where it says account? Everybody see this, right? See where it says Sim 101? Let me close it out. Okay, I'm closing it out. See where it says Sim 101? So if you've been doing this in the past where everything dumps into Sim, then you're not able to separate your results. It's very hard to tell how you did on every instrument because you can't track it separately. It's all dumped into Sim. One big pile of results. Now, let's say hypothetically you do have an NQ account. Right in here you select it. Does everybody see that? I just picked NQ. Right? Now here's the difference. Okay, this is very important. When I hit apply, this is going to be green. All right? So it's going to look like it's a live account because it's not specifically Sim 101. It's going to be the green color. But you know for a fact that you have coded that to NQ, which is a Sim account. So that's the only thing you got to be aware of, is that the color will be different on the panel, but it's still a Sim account. Does everybody see how to do this now? Now, for those of you that did it and got a huge benefit out of it, congratulations. I'm glad you followed the suggestion. For those of you who didn't do it, this is your chance to come back and do it. I'm telling you, if you want to get focused on how you're doing on each of these instruments, this is one great way to do it. You know, because you think you know how you're doing, but a lot of times you really don't know how you're doing, and this will fix that for you. All right, that's a wrap, everybody. Thanks for coming. I'm going to stop the recorder.